If you're in your 20s, listen up. I'm about to take $1,000 of my own actual money and try to prove something. You can still turn a small amount of cash into something huge, even in the middle of a recession. Everyone assumes you need to wait for the economy to feel safe again before you touch your savings, but that exact thinking is what keeps people in their 20s broke while everyone else quietly gets ahead. If you've got $1,000 or even lower sitting in your account doing absolutely nothing right now, this is exactly what I do with it. Split across 4 completely different assets, and I'll walk you through the exact math and reasoning behind every single one. We'll also see what not to do with a selected asset class, so stick around to see exactly how. Let's start with the boring one first, because boring is usually what actually makes people rich.
$250 goes straight into index funds. Here's a number that should stop you in your tracks. If you invest just $5 a day, that's roughly $150 a month, into the S&P 500 at an 8% average annual return, for 45 years, you end up with somewhere around $791,000. That means every single $5 you put in today eventually turns into about $48 down the line. During a recession, index funds matter even more than usual, because instead of betting everything on one company surviving the storm, you're spread across hundreds of them at once, absorbing the shock together. I mean, it's no secret that 92% of top hedge fund managers actually underperform the S&P 500 over a 15-year stretch. Think about that for a second. People paying thousands of dollars a year for professional financial advice are still losing to a fund that literally anyone can buy in about 5 minutes flat, with no meetings required. Most people also assume the S&P 500 is purely American exposure, but a massive chunk of those companies' revenue actually comes from overseas, so you're far more globally diversified than you'd think just looking at the name. I'd also throw a small slice into emerging markets on top of that, simply because the balance of global economic tower isn't guaranteed to stay exactly where it is forever, and getting in early on that shift beats getting in once everyone else already has. Next, $250 goes into starting or growing a small business, and I know that sounds absolutely terrifying to attempt during a downturn, but stick with me for a second. 88% of millionaires are self-made entrepreneurs, not stock pickers, not lottery winners, not people who inherited it from family. Recessions are actually one of the smartest possible times to start something, because overhead costs are cheaper across the board. Customers are actively hunting for affordable alternatives to whatever they used to pay full price for without thinking twice. And recoveries historically last far, far longer than the recessions that came directly before them ever did. Just look at what followed the dot-com burst or the Great Recession. Years and years of sustained growth that completely dwarfed the downturn itself. Most people pour every single spare dollar into stocks and completely ignore investing in their own skills or a small side business sitting right in front of them. I know someone making $400 a month right now just selling exam prep PDFs online. Something almost embarrassingly simple. Reinvesting even half of that, say $200 a month, straight back into advertising could realistically outgrow anything sitting passively in the market. Refusing to reinvest profit back into your own business is basically like refusing to water a plant and then wondering out loud why it's dying on you right in front of your eyes. Now for the riskier stuff. $250 goes into individual stocks. This is where you can genuinely beat the market, but it's also exactly where about 90% of people trying this actually end up losing money, because they buy based on a tip from a friend or a random video instead of actual research. Recessions can create real buying opportunities though, because good, healthy companies go on sale right alongside the weak, struggling ones, and most people simply can't tell the difference between the two in the moment of panic. The trick is looking for strong management, low debt, healthy cash flow, and a solid balance sheet. All information you can pull up completely free on something like Yahoo Finance in a few minutes. Certain sectors barely flinch during downturns. Healthcare being one of the biggest examples, and companies like Walmart and McDonald's tend to genuinely thrive when people start cutting back, because cheap wins when wallets get tighter. Personally, I'd put this money into a stock like Apple. People just don't give up their iPhone the second the economy gets a little shaky. It's practically the last thing they cut from the budget. And most phones are locked into monthly financing contracts anyway, which means Apple keeps collecting steady, predictable revenue no matter what the headlines are screaming that particular week. Finally, the last $250 goes into crypto, the one asset on this entire list that could genuinely turn $1,000 into millions, and also the one most likely to wipe the whole thing out completely if you get greedy.
I dismissed crypto for years before the underlying technology actually convinced me otherwise. Decentralized systems that could realistically reshape banking, law, cybersecurity, and insurance from the ground up. Industries that have barely changed how they operate in decades. I'd personally keep this to roughly 5% of a full overall portfolio. Never more than that. Bitcoin and Ethereum are the blue chips here. They've consistently held the top 2 spots by market cap for years now, through multiple brutal crashes that would have wiped out weaker projects entirely. A recession can knock prices down hard and fast, which historically has turned into a genuine buying opportunity for patient investors. But this only ever works as one careful slice of a diversified plan, never the whole thing, no matter how convincing the hype gets online.
So that's the full $1,000, broken all the way down. Index funds for guaranteed long-term growth quietly compounding in the background. A business for the fastest realistic path to real, meaningful money built entirely by you. Individual stocks for calculated, informed upside once you've actually done the research. And crypto for the lottery ticket that genuinely has real technology sitting behind it, not just excitement. None of these need you to sit around waiting until the economy magically feels safe again, because by the time it finally does, everyone else will already be back in, and the best opportunities will already be long gone by the time you decide you're ready. If you want to know what critical habits to imbibe to set you up good for the long term, I've already made a video on that, right up there for you, but don't click on it just yet. Consider subscribing if you want to keep building real wealth with me. I'll see you over there. Cheers!